the step up in bases and why it is so important in estate planning. So we all know that the IRS is here to take a bite out of the apple of every penny that they can get their hands on that represents our income. However, there's one little gift that is buried in the IRS code. It may be the only gift that we get. It's under section 1014 of the IRC, or Internal Revenue Code, known as the step up in basis to fair market value on the date of death. So the reason that's important is that certain properties, if you handle them properly in your estate planning, get a magical step up in basis. And that means that when your beneficiaries go to sell the properties, they can pay less or sometimes zero in capital gains taxes. Quick story, and this is a true one. I had a family here in Tampa that the parents acquired the property, their home, back in probably 50 years ago. They paid like 50 grand for it, down near Bayshore Boulevard, a really nice property near the water. And so $50,000 they paid for it. At the time of their death, it was worth over $1 million. We'll use $1 million for illustrative purposes. So the children took mom and dad down to the county and deeded the property to themselves during life, before mom and dad died. So they were thinking they were doing a good thing by avoiding the dreaded attorneys and their associated fees. But what they ended up doing is gifting the property to themselves during life. And so congratulations, you did avoid probate. However, when they sold the property right after mom and dad died for, let's just say, $1 million, they were forced to pay capital gains income taxes on the difference between what the parents bought it for, 50 grand, and what they sold it for, $1 million. So $950,000 of capital gains taxes. Some of that at least will be hit at 20%, some at 15%. And so that was a big tax bill, over $100,000 in taxes, when we could have done something as simple as a ladybird deed or a trust for a fraction of the price and taken advantage of this gift of the 1014 IRC step up in basis to fair market value. They would have paid zero in income taxes. So that's why basis is important, and that's why estate planning can be used as a tool to minimize or even eliminate the capital gains income taxes on appreciated real property. Have a great day.